Alphabet released its earnings just the other day, and GOOG, GOOG, Google stock, shot up. What comes next? Is GOOG a good investment, value investment? Two things. First, the economy. It's always about the economy. The U.S. economy is likely to continue to decline in its rate of growth. Take a look at SBUcks. Starbucks released its financials and defecated some 15%. That should tell you what condition the consumer is in. So advertisements at Alphabet, GOOG are going to get hit. Sure, some AI numbers are looking good, but that's going to be a small percentage for a period of time. In the meantime, you've got to deal with the U.S. economy. The Federal Reserve is going to keep interest rates higher for longer. This will have a significant effect on consumers. Just keep looking at SBUcks. Number two, most important thing when it comes to Alphabet, competition. Take a look at Microsoft. They're continually growing in that niche, taking away from Alphabet. Google search. GOOG stock eventually will be affected by that. Boy, if there's one company on planet Earth you do not want to compete against once they get an edge, that would be Microsoft. Given that, I see the future competition to be very stiff. But before that really takes an effect, regardless of or notwithstanding the AI jumps that Alphabet has printed, GOOG stock has to deal with the big elephant in the room, the U.S. economy, higher interest rates. Again, keep looking at the stock chart on SBUcks. That is what's going to happen with all stocks. Consumers are going to entrench. Companies like GOOG are going to get hit. Let's jump in and I'll show you what I'm looking at. Here's a good look at GOOG is the ticker symbol, GOOG. GOOG shot from about 157.5 all the way almost up to 184, but since then has just continually slid lower. Great news going forward. And actually, there's a lot if for a value investor, given all else equals, GOOG stock is one of the stronger value investments because it was sort of underappreciated. Now with new numbers, there's value there. Except the economy. Moving forward, here's a bigger look. We've seen some big moves. It was roughly, 132 towards the beginning of the year, then shooting all the way up as it did. I expect we may see these numbers again. So that's something to keep in mind. But this is really the bigger story when it comes to Alphabet with their search. Google searches are losing bit by bit by bit. It's sort of the proverbial frog in the pot. Microsoft, as you can see, they used to be one-offs. Yandex is starting to grow a little bit there as well. Worldwide, people are getting out of Google search. Now, as it turns out, the person who's running Google search right now, I saw a video on this. He came from Yahoo when they were declining. He's now in charge, and apparently they're prioritizing spammy content for dollars versus quality. People are noticing that. Now, AI could really kind of shift things with that, but that's going to take some time, I think, till we start seeing that. Nonetheless, Microsoft is really starting to become that winner. We could see Google search results sub 80 into 75%, and then it becomes a snowball. I don't know how that plays out. It's going to be interesting. Q1 2024, of course, we saw continuing increases. Q1 2023, far lower. But again, who are the customers for Alphabet search, Google search, things like this? These are smaller businesses advertising, or businesses in general advertising toward consumers. The consumer is tightening their purses and wallets. The 2024 projections, I had to push these a little bit higher. 345.4 for 2024, 2025, 383.8. All else equals, I don't believe analysts have this correct at this point because the economy will contract. And then after it's all done, people are going to say, well, we were shooting for this, but then the economy shrank. You need to stay ahead of the curve. This is how I do my investing. In the meantime, over the past couple of years, 29% net margins. This is bigger than any other quarter for Alphabet. These earnings really shot up, and that's one of the reasons why GOOG stock shot up like it did. Earnings per share projections: 2024 $7.30, $8.36 for 2025. 769 on the next 4 quarters. So it isn't necessarily 2024 I'm looking at. Given the price, 167.75, you're looking at a yield of 4.58% for GOOG. That's not bad. U.S. 10-year Treasury, 4.657%. The only problem with that is the risk to reward ratio. Let's talk about the 10-year Treasury. That is the benchmark, the measuring stick for investments. It's trading at 4.65%. Let's say you buy into a whole bunch of Treasury bonds. All right, and this is what I'm doing right now. I'm buying TLT stock because yields are where they are. The Federal Reserve just met and they basically told us we probably don't need to go any higher. They will keep interest rates higher for longer. We've got the presidential election happening on November 5th. With the presidential election, Federal Reserve isn't going to want to do anything. They're going to sit on their hands and say, yeah, inflation's a little sticky. More than likely, we will lower interest rates at some point. They're just going to talk. But they're not going to want to make any kind of moves if they don't have to, because they don't want to look like they're swaying the election in any manner whatsoever. So if you bought in on those 10-year treasuries at 4.657%, and the Federal Reserve 6 months from now lowers interest rates, price goes higher, which means you're sitting on profits. Number one, you're locking in the 4.65%, which is ever so slightly higher than GOOG. So 4.65%, you're locked in. But once the Fed lowers interest rates, you're sitting on profits. 10, 20, 30% move in the price of the 10-year treasury, not the yield, the treasury, versus GOOG. At these prices, you're pretty much par for your benchmark. But don't you want a little more premium over top of the risks-free investment of the U.S. 10-year treasury? Wouldn't you rather have 4.75, 5.25% as a potential return? The thing is, I do not believe, given the economic environment we're moving into, that these companies are going to hit their revenue and earnings projections. You need to stay ahead of the curve. Keep looking at Starbucks. That's one of the orange mocha frappuccinos is one of the first things that goes. Things are tight. We just don't have the budget. Fine. I won't pick up my frappuccino on Monday. What's next? All those businesses advertising are going to, the marginal ones are going to stop advertising as much. Even if it's incremental, small, it affects the top line for GOOG, which affects the bottom line for GOOG, which affects GOOG. When you look at the economy from that perspective, we've got about 6 months of the Federal Reserve keeping interest rates higher for longer. Take a look at Starbucks as your starting point and realize it's not going to be pretty over the course of the next 6 months. I've been calling for these kinds of moves for months now. I said throughout the summertime that there would be a bloodbath. I said this back in October and November, looking at economic data. In 2022, I put out my video for 2023, basically called with that video the entire market moves to a T. And now I'm seeing 2024 play out exactly the same way. The economy will be restricted. The Federal Reserve will finally lower interest rates November, December, January of 2025, February. Too late. These companies' revenues, they missed. They missed earnings. GOOG stock goes down. Then you got the fact that Microsoft will eat their lunch. Give them a 0.1% move, they're going to keep going. Google is sacrificing quality for quantity, and we're seeing the results of that. People are moving away, looking for other options because they're just not getting the results they're looking for. I look at Google, I like it as a value investment. I just think that they need to address a few things, and I think the stock is overpriced because of, first and foremost, alternative investments. Secondly, the economy. Third, competition. Make sure to hit that like and follow button. I did a write-up on this. If you want to read the written analysis on Google stock, make sure to click the link to my Substack newsletter down below. Also, if you're just finding this channel for the very first time, hit the like and follow button. Thanks so much for the comments. I break down everything based on the economy first and foremost. Then I look at the individual stocks. We're going to have some ugly days up ahead. Make sure to hit that like and follow button. See you in the next video.